We now move to the second big theme of our conference regarding fintech innovations and retail payments. And I'm very happy to introduce José Maria Roldan, Chairman and CEO of the Spanish Banking Association and Vice President of the European Banking Federation, to illustrate to us whether fintech innovations are an opportunity or a threat to incumbent banks. We have heard a lot this morning about banks. Now we are keen to hear from banks.
Thank you very much. Thank you. I must confess I'm a little bit intimidated, not because of the beauty of this place. My origin is Bank of Spain, and we can compete with Italy in the beauty of our central bank headquarters and in football. This is two things we can do. I'm intimidated because really I don't know what I am. Am I a dinosaur or the ugly duckling? If I look at my handwritten, PowerPoint presentation, probably I'm a dinosaur, still handwriting my speeches. If I think about the content, probably I'm the ugly duckling. So let's see how it goes. Let me start by the first block of my presentation, because if I go to the answer is both, and we go to the coffee break, but that would be too easy for you. So you will have to stand half an hour of my comments. The first block I want to mention is the operational environment of European banks. I would say global banks even, but in particular European banks, because I think it's very relevant to understand the challenges that we are facing. The first element of this operating environment is regulation. In my past life as a regulator, I described what was going to hit the banks as a regulatory tsunami. Well, the regulatory tsunami is hitting us with all its strength. We are, yes, finalizing the regulatory phase, but we are in the implementing phase of many, many measures that have been introduced. And the thing that is key to understand is not just that we are overwhelmed by the volume of new regulations that we have to apply, by the strength of some of these regulations. What you need to understand is that we regulate the financial sector by institutions, not by activities. We regulate banks, insurance companies, investment funds, shadow banks that are a little bit outside the scope, but also being monitored. We try to monitor and regulate financial institutions, but the reality is that activities is what matters. So that means that the regulation that we are putting in place is very prone to capital arbitrage, and this is something that we should not forget. The second element of this operating environment of banks is the fact that we are operating in an environment that is putting a lot of pressure on the profitability of banks. Couple of very obvious things. The low interest rate environment is a killer for the banking industry. If you tell me 10 years ago that banks would be able to sustain with positive profitability a prolonged period of very low, even negative rates, I would tell you, well, forget about it. After the third year, we are dead. Well, we are not dead. We are managing to survive. Even return on equity is increasing, but this environment is very, very difficult for the banks. The fact that we have excess capacity in Europe is another element that is putting pressure on profitability, and it's not me saying that we have excess capacity. It's the ECB as a supervisor saying that every time they meet with bankers all across Europe. So second element, I would say, an environment of pressure on profitability of banks. The digital revolution, this is what I'm going to talk after these initial remarks, of course. And last but not least, the reputational problems affecting the banking industry. Reflected in Court of Justice ruling all across the world. This is a global phenomenon. Even in countries that did not have a financial crisis, like Australia, yesterday was announced an inquiry committee to look at the abuses of banks towards consumers. We have a reputational problem in the banking industry. And the problem of that reputational problem is that there's a perception gap between the importance of the role of banks in society and what society thinks about the importance of banks. We think that we are an industry that is key for the economy, for societies, but the perception of society is not that. And this is creating huge problems for the banking industry. And this may explain some reactions that we have when faced with uncertainties. And I will come back to this later on. On the digital revolution, let me try to highlight what I think are key elements of this digital revolution that we are witnessing. Sorry, this is going to be obvious for you, but I think it's good to try to go through them a little bit. This revolution is technology-driven. No-brainer, okay? I'm not going to spend half a second on that. Second element is that it is demand-driven. This is more important. This is different from the dot-com bubble of the late 90s. In the late 90s, we also have a financial component in those development, but it was the banks trying to change the way their clients operated with them, rather than clients looking for a new way to deal with the banks. This is different. This time is different. This is demand-driven. It is our clients, it's the consumer, the one that wants to operate with the banks in a different way. You all know this thing that, millennials prefer to go to the dentist than to go to the bank. Okay, probably they have a good teeth, otherwise they would not be saying that. But that's an indication of how demand is shifting. And in fact, demand is shifting not among the millennials, but among all the segments of population. People want more and more to deal with an application. They don't want to deal with a person in an office branch. And that's a reality that is coming to us. This is demand-driven. The combination of technology and demand-driven changes is very, very, very powerful. And this is something that makes probably all this quite unstoppable. Third element, the scalability of all this. The economies of scale. The marginal cost of adding a new customer is zero. This is different from other technologies that we have seen in the past. We are talking about economies of scale that are very massive, so size really matters in this new environment, but we are also talking about an environment where natural monopolies tend to appear. This last figure I had on Ant Financial was that it has 500 million users, where we are hearing this morning about 2 billion users as a target. This is massive. This is creating new players that probably pose new risk, and I will come back to this a little bit later. We economists, we don't know a lot about technology, but we do know something about monopolies and oligopolies. This does not end that well for consumers in the long run. So that's a word of caution. Another element of the type of revolution that we are seeing is regulatory driven. Yes, I was one of the 2% that was answering that regulation was driving the changes. It was me. I'm a banker, you have to understand, which is my. But let me be very clear. I think that regulation is playing a role. Regulation usually stops innovations. In this case, in the payment system sphere, is pushing for changes. Since 20 years ago, we were listening this morning. So I think that that's a big change. It's not just, the environment that is changing. It's also regulation and the regulator, the one that is pushing for greater innovation, greater competition. So it's also an element that is different from other times and other occasions. I will also mention here the open, boundless, global reach, wide spread of technologies, wide spread of different players. This is a very open world. In fact, it's very difficult not to get lost when you get into this, because you have so many operators using so many different technologies that it's difficult to have a clear picture of even where the menace is going to come from. So it's a very open world, very global in its reach, not respecting national frontiers or currency frontiers. That makes it very difficult to disentangle which technologies are going to be successful. You have Bitcoin, my bet. I mean, you may go as well to the casino. That's my bet. But what about initial coin offerings? What about the technology that is behind Bitcoin, the blockchain technology? What about cryptocurrencies? It's very difficult to disentangle what is going to work and what is not going to work. Or let's say you can identify, well, something that has no viability, Bitcoin probably is one example. But then what lies behind Bitcoin is so big, so varied, that it's very difficult to understand what will happen in the future. The fintech world is also very dispersed. You know, when I try to have a dialogue with the fintech world, but every time I meet an association, it's very difficult to know what is behind that. If you talk to the Spanish Banking Association, you know who is behind. European Banking Federation, the same. When you talk to these fintech, industry representatives, sometimes you wonder, well, is this, an industry representative or is this a personal project? It's very difficult to have a dialogue with them. And we are, very eager to have a dialogue with them, but it's a very voluble world that is not yet, well established. There's a reason for that. Obviously, the high death rate of fintechs. Let's not forget that this scalability means that, of 100 fintechs, only, 5% will survive, and the other 95% will go bust. So there are reasons why it's so difficult to really understand what is going on. They are extremely good at communicating anyway. They are far better than us, the banks. So in that respect, maybe, the next chairman of the Spanish Banking Association should be someone coming from a fintech. That's a lesson to be learned. Last but not least, the issue of security. I think that the new world is going to be safer. Frankly speaking, I think it's going to be safer, but it's not going to be bulletproof. So we need to understand the new forms of fraud that will emerge. We need to understand where they will come from, what will they represent in terms of menace to the public order, to financial stability, etc. We are going to go to a safer world, but it's not going to be a bulletproof world, and we cannot be naive in thinking that risks have disappeared. Okay, as you see, a very different world that is evolving in many aspects and that is very complex to understand. Let me now go to the main part of my presentation, which is banks versus fintechs, like a football match. Let's put it like that. For banks, I can tell you it's both a challenge and an opportunity. A challenge because we will have to compete with these new players, but also an opportunity to reduce costs and to have a higher return on equity, which is a challenge that we are facing. What are the strengths where is the strength of banks? I would say the first one is size. We have a client base that is very big. Even the smaller bank has lots of clients. Here we have an advantage. We don't need to look for new clients. The clients are within our remit. Second strength of the banks, we have the information. We have lots of information of our clients. To be very frank, having the information is not enough because you may sit on a pile of oil, but if you don't extract the oil and transform the oil, well, there's not too much value of what you have. So banks need to learn how to exploit that information that they have. Authorities need to give permission to the banks to be able to exploit that information in the same way fintechs are allowed to do. But we have that source of information that can be very valuable. Let me mention technology, at least in Europe. And in here, I think that Europe has a very strong sector in terms of technology, also because of the central bank community, thanks to the central bank community, in particular versus the US. Remember, the clearing of checks in the US involved, not so many years ago, the physical travel by plane of thousands, millions of checks all across the US to be cleared. That was just a few years ago. This was not seen in Europe decades ago. So let's not be here naive. We are very strong in terms of technology, and we should be able to play that card well. Another strength of banks, regulation. It's a curse that what is killing us is also may save us in the future. We know how to deal with regulation. We know how to deal with regulators. We are masters of that. I cannot see, some fintechs, the day that European Central Bank examiners goes to visit them, I would love to be present in that conversation. We know how to deal with these people. They are very difficult people. I know it. I have been in the Bank of Spain for many years. So in that respect, regulation, we know how to deal with regulation, and regulation sooner or later is going to be there, and is going to represent a major challenge. If you think about, Silicon Valley companies, I mean, the spirit there is total liberty, and when you are supervised, that total liberty is, not the case. You are in bail all the time, You are always under vigilance and surveillance. Last but not least, regarding the strength of banks, believe it or not, trust. People don't love us, but they trust us. In fact, they trust us with the thing that is most important for them, which is their money, their wealth. It's a little bit bizarre that we get so much criticism socially, but yet, when it comes to trust, people continue to trust their banks. Otherwise, I would not be talking to you today. So this is an area that we understand very well, and we give a lot of value to preserving that trust. What is the strength of fintechs? They also have strengths, I'm afraid. I cannot deny that. The first one is innovation, of course. Innovation. They have the advantage as well that they have no legacy systems. So they can pursue solutions that are more cost efficient. We have legacy systems at the banks. Even thinking about countries, why Asia is so developed in terms of financial provision, digital provision of financial services, sorry. Well, because probably they didn't have, these legacy systems. They have a population that was not so well banked, and then, they had the opportunity to go, from stage 0, financial exclusion, to stage 5, which is, digital revolution in finance. That's a huge advantage, not having, legacy systems. They also have, and this is very important, fintechs, they also have, a very clear idea of user friendliness. Let's not fool ourselves. If you take your iPhone, your bank application is going to be, very solid, bulletproof, but it's not going to be very amusing. Any other application that you have is going to be more user-friendly than the application of your bank. We need to understand better, this customer-centric world, we need to understand better. And in that respect, we recognize that fintechs are in that respect far more advanced than we are. So let me go to the question, cooperate or compete. I think that we have several modes. It's both things at the same time, We have a defense mode, instant payment, mobile instant payment is being offered by Spanish banks. Why do we do that? Because we want to stop, competitors from entering our field. We are renouncing to revenues, yes, but probably we were going to lose those fees and revenues. So the first thing that we are doing is, when we can react, we do react, and we try to compete, and we try to establish solutions that are going to deliver what a fintech can deliver. But also, I think that we also need to understand better, the approach that they have to the clients. This user experience is going to be more and more important, particularly for this millennial generation. We need to understand better how they approach the solutions. So cooperation is going to be an element of the equation. In fact, banks are cooperating with fintechs all across the world, and particularly in Spain. So this is something that is already occurring. So in the world, banks versus fintechs, both competition and cooperation. What we always say, and think about what I was saying about regulation being based on institutions rather than on activities, we always remind regulators that same risks, same activities, same regulation and supervision, because otherwise you are going to create a system that is very prone to capital arbitrage. We need also, areas where we can experiment, the sandbox, the famous sandbox. Well, a fintech has far more liberty than us to develop experiments. We need that liberty. It's very difficult in regulation because this concept is not there. I mean, you have to comply with the rules, and there's no materiality threshold in the European regulation on this. But we really need this if we want to compete, let's say, effectively with them. Remuneration policies. Think about remuneration policies. In the fintech world, failure is rewarded. If you talk to anyone that is in this world, they will tell you that when hiring someone, the fact that they have the experience of a failure is very important, because with a death rate of 95% of fintechs, it's very important that people understand how you die, when you die, and why you die. In the banking world, I mean, there is no way you can remunerate failure, because remuneration has to be in line with profitability being obtained, with all the rules that have been placed. So in terms of incentives, all the regulation in the sphere of banking in terms of remuneration is geared towards success in terms of higher profits. So we have these places where the general rules that we have do not feel very well. Let me try to finalize by raising some elements of caution. Trust. It's extremely important for the banks. My friend Paco Tur, who is sitting there, was horrified about me talking about screen scrapping as a monstrosity. We had dinner in Madrid a few weeks ago. I was worried because I was not sure that monstrosity existed in English. Yes, it does exist. But I do think that screen scrapping is a potential monstrosity if it ends up creating, you know, the wrong type of situations vis-a-vis the customer, the consumer. And I know you have a strong customer authentication, SCA. You have, I mean, we'll have a strong interface, strong APIs. So we are working on that, and the more we work on that, the less this possibility of screen scrapping being used, you know, in a fraudulent way will happen. But you have to understand, you know, our basic good is trust, A. B, when a client, a customer, has a problem with a third-party service provider, who do you think he's going to sue? Who do you think is going to sue? I have no doubt, the bank. The bank, because it's where the money is. So we need to send this message that we are worried about this situation, we are worried about potential vulnerabilities, and that we are not going to be responsible if something goes wrong. Because we cannot, as the Commission was recognizing in a letter to the European Banking Federation the other day, our role is not to look after third-party services providers. This is not our role. This is very important, because in a court of justice, this argument is going to be used in the next decade time and time again. Believe me, no doubt, the client will sue the bank. Second element of caution, the impact of banks. Banks are seen as dispensable these days. And I'm not talking about, you know, tabloids. I have a discussion with a member of the European Parliament a few months ago in Brussels, where, talking about PSD2, he was saying, well, and if banks disappear in the process, so be it. Wow, that's a tough statement. For the time being, banks finance the real economy, so we may disappear, but you better have a B plan in order to finance the real economy, because otherwise this is going to end up in tears. So this idea that our banks are dispensable, let's be careful about that. We may disappear. No institution has survived for the last 2,000 years. Well, maybe the Pope. We are in Rome. The Pope has survived 2,000 years. Yes, okay. That's the only institution I can think of that has survived 2,000 years. So we are not afraid of change, but at the same time, I mean, let's be careful with what we want. Beware, in that respect, of the impact on banks. There was a very good discussion on cryptocurrencies. Crypto cash. If this is done in a way that is not very well thought, we can end up in tears. I can imagine in a low interest rate environment where holding deposits does not give you a lot, in a situation where, trust is very volatile. We have seen that. In an environment where you have silent bank runs, because bank runs do not require rows in the street anymore. You just go to the computer, and in one day, the bank is gone because of a bank run that you have not even seen. In this type of environment, if you have a systemic crisis and a sudden lack of trust, the shift that you can see between, sight deposits and cryptocurrencies can be brutal. Okay, this idea, limit the amount, limit the utilization, all this is good. It goes in the right direction. But let's be careful with experiments. If you are going to do an experiment, you better think, what happens if the experiment goes wrong. So beware of the impact of these new ideas. And finally, beware of new risk. Cybersecurity is a major challenge for all of us. What will happen the day that the internet stops to work? For, let me be positive, 3 days. Can you imagine that? Can you imagine that? I prefer not to think about that. So I think that we need to prepare to a world that is going to be safer, but where low probability, high impact events like this, we must be sure that they will never occur, because the consequences of that for the whole society can be devastating. So let me conclude. I think that it's very clear that from the banking industry point of view, we understand that the future is digital. Either the future is digital or there's no future for us. So it's not that we don't embrace the revolution. We are not idiots. We have to embrace the revolution because it is unstoppable. Banks, as the incumbents, have a very difficult position. I always remember Kodak. I mean, if I ask my sons what is Kodak, they have no idea. Well, remember what Kodak was and what Kodak is right now. So we don't want to be the Kodaks of the future, but being incumbent is very tough. But frankly speaking, I do not recognize the bankers that Chris Skinner was talking about. Look at the European Banking Federation. We have initiatives and regulatory sandboxes on the use of data by the banks, on cybersecurity, on cloud computing, on e-identification, on the treatment of software. I will refer to this. On PSD2, screen is crapping, you know that. On software investment. Software is deducted from regulatory capital. Those are the rules of the Basel Committee. For a bank that invests €1 in software, they have to put aside €1 of capital. Tell me that now that we are moving to an intangible economy, this rule, done for very good reasons, I was there, I was part of the decision makers of those days, tell me that these rules going forward make sense. Because if you apply a bank, for every euro of investment in software to have €1 of capital, the bank is not going to invest enough in software. Well, this is happening in Europe. These are the accounting rules and the regulatory rules. We want to change that. We are talking with the European Commission to try to change that. Finally, let me also mention, this world of caution. We need to understand the financial stability fragilities of this new environment. We may be dinosaurs. We may be dinosaurs. I'm ready to accept that. But your dinosaurs are financing 75% of the productive economy of the European Union and the Eurozone. So we are dinosaurs that are playing a role. If dinosaurs are to disappear, I will look for another job, no problem whatsoever. But we also need to think who is going to finance the real economy in Europe. Thank you very much for staying here.